Let's talk about the lending rate cap, and commercial banks will now be at liberty to charge interest rates as they please on loans. Now, this is after the National Assembly failed to overturn a memorandum by President Uhuru Kenyatta that wanted the rate cap removed. Now, members of parliament failed to raise numbers required to overturn President Kenyatta's reservations of their earlier attempt to retain the limits on interest rates at 4% above the base lending rate as set by the central bank. Now, only 161 members of parliament were present in the House against a threshold of 233. In his refusal to assent to the financial bill, President Kenyatta said the interest rate caps stifled borrowing by SMEs.
Displayed, total present 136. Manual present 25. Total 161. The net effect on the motion is that the ayes have it and the motion is carried because we were not able to raise the 233 to take a vote, a vote either way. So the ayes have it, motion is carried.
All right, talk to us about, the lending cap rate that has been lifted by Parliament. Let's talk to Caleb Mugendi, Assistant Head of Investment at the Cyton. Thank you so much, Mr. Mugendi, for talking to us. When you talk about, banks, commercial banks being at the liberty to give the interest rate at their own pleasure, what are we talking about? Do we expect banks to have the same interest rate, or banks will have different interest rates?
Thank you, Bren. I think the liberty to price loans and price for risk is something that each individual bank will come up with its own parameters. And depending on the client segment that they're lending to, they'll have liberty to charge interest rates that suit their risk, their clients' customers' risk profile. It will be varying now, coming out from the cap of 4% above the central bank rate, where all loans were priced at 13%. Mm-hmm. So now we'll find a lot of banks pricing loans differently, though there have been a number of developments where customers can actually access the interest rate to be charged by banks. We have the total cost of credit website, which is an initiative by the Kenya Bankers Association. Mm-hmm. So customers can actually go there and check the interest rates that are being charged on similar loans across the banking sector.
Mm-hmm. So, this decision by Parliament to lift the rate cap has exposed, has left exposed customers or Kenyans have been exposed to expensive bank loans. So what happens to people who had taken loans when the interest rate was at probably 13–12%?
Yeah. I think there's a caveat in even in the motion that was passed that if you had taken loans during that period of interest rate cap, they won't be automatically priced higher. Banks during this period of interest rate caps, there's a lot of changes that they undertook, especially in the giving out of loans. Mm-hmm. They reduced the tenors. So probably if you were qualifying for a loan of 5 years, or you wanted a loan of 5 years, maybe mm-hmm. they offered you a loan of 2 to 3 years. Mm-hmm. Basically reducing the average tenor of loans from close to 4 years previously to around 2 to 3 currently for most banks. So even the loans that were taken during this period of the interest rate cap, within 2 or 3 years, they already have matured. And basically, banks will now be able to price or offer interest rates depending on their customer's risk profile. Mm-hmm. Yeah. So
that means if I took a loan, a bank loan at the interest rate of, let's talk about 13%, because most banks are offering their interest rates at 13%, yeah. Then I won't be so much affected yeah. by the decision Parliament has made.
Yeah.
Now, let's talk about President Uhuru Kenyatta's statement. He said that the reason as to why the cap rate has to go back to what it was before, it's because it stifled SMEs. Mm-hmm. And that was at 13%. Yeah. Now we're talking about interest rate going as high as probably 20–23%. Mm-hmm. Will it not stifle SMEs more?
Well, one of the main, if you look at SMEs, they're one of the backbone sectors in our economy. And one of the reasons a lot of businesses actually fail is because of lack of access to credit, to capital, to finances. So how it stifled SMEs, it wasn't that the interest rates were, they couldn't service their borrowings, but they were denied access to credit and to loans by the commercial banks. So the only options that they had were to look for alternative sources of funding. So that's why we saw a prevalence or proliferation of other alternative mobile financial services lenders, mobile lenders, and regulated lenders. They actually came up quite strongly during this period of the interest rate cap because they were able to extend credit to that customer who was being shunned by commercial banks. And these were even at rates that were quite high, especially if you annualize them. We're looking at rates of between 90 to 110, 15%. So those are now the options that SMEs were being subjected to because commercial banks had a cooling price for their risk, and they thus withdrew credit from this segment of the market. Yeah.
So when you talk about roughly 20-23%, the SMEs will be comfortable with what Parliament has passed as we speak? Because I'm just looking at it, 23% or 20% or 18 or 19 interest rate compared to 13%.
Yeah. It's a shift upward for sure. I think my opinion, my view currently is that we won't see the 20s immediately, 20-23%. I don't think that will come out immediately. However, there's still there's some steps that have been taken. We have the banking sector charter, which has been championed by the Central Bank of Kenya. Basically, in terms of being more transparent to your customers, more cutting out all these things of hidden costs, just being more customer-centric in the whole banking sector at large. So I don't think immediately we'll go back to the interest rates of sub-20s. So 18, 17, 19, I think that is very plausible. For this, despite the fact that they're considered high interest rates, I do think that the initial benefit of supply or access to credit is something that will be more of a benefit to these SMEs, because you look at these businesses, they're operating, they have cash flows, they actually for them to scale up to the next level, they just need more access to credit and finances. And this is what they have been denied by commercial banks over the last 3 to 4 years.
All right. So now that the interest cap rate has been lifted, so you're going back to the regional interest cap rate, at what point do Kenyans expect to go back to the regional interest rates that were there? Because I'm sure some are expecting the banks to, today, because the interest rate cap was lifted yesterday and Tuesday. So being a Wednesday, some are expecting that to be immediately implemented. So are there banks that were just waiting for Parliament to do their duty and then they immediately start?
Well, it hasn't yet been assented into law. There's still, I think, a week or two, maybe a week before the president actually assents to the bill. So doing it right now is actually not legal. So after, because it won't be more than 2 weeks after that, then it will actually become legal. What I do expect immediately is for customers who haven't got a facility to either be, even if they're already in discussions, possibly they might be delayed a bit during this period so that banks can charge them on the uncapped interest rate. However, if you already have a facility, one of those addendums is that your loan should still remain at the rate during the cap, which we said is quite reasonable. I think there's also more room for negotiation between customers and banks because of this banking sector charter. So basically, you can go talk to your relationship manager, discuss about the facility that you have, and put out a case to remain at that interest rate.
All right. So, the interest rate cap that has been lifted comes at a time when the economy is not doing really well. And we've seen some Kenyans lose their jobs because companies are just laying off, they're not making profit, and some are closing, down. So what effect will it have on the economy as we speak? Do we expect Kenyans to shy away, from taking loans? Do we expect Kenyans to continue taking loans? Because this will also have an effect on the banking sector.
Yeah, for sure. Immediately the interest rate cap was implemented, actually banks had to adjust their models. We saw a lot of layoffs in the banking sector, which was a first hit. However, this year, more, I would say it has been more widespread, the layoffs. I think in 2018, Kenya had the lowest number of new jobs created since 2007 or around, or close around there. So there's actually a slowdown in the economic growth, despite the fact that we're doing more than 5% economic growth in the country. A lot of this GDP is being driven by government spending on infrastructure-related activities. So it's not it's GDP growth, but that's not translating into the common worker's pocket in terms of increased wages or increased disposable income, and also not translating into businesses via increased profits and expansions and the like. So this is one of the effects actually that has been studied by the central bank of the interest rate cap, is also the fact that it also reduced economic growth in the country, mainly again because of the lack of MSMEs financing. So my initial view is that with the ability for banks to price for risk and all these changes that have happened in the banking sector, we do expect that these MSMEs will be able to get credit, possibly ramp up again in terms of economic growth, expand, and actually it will affect now the creation of new jobs, the creation of fast economic growth, and also help people to I do expect customers and Kenyans to go for loans again, especially if you were locked out during the interest rate cap, because the only alternative was the mobile lenders, which were quite higher in terms of the interest rate cap if you compare. I mean, if you compare to interest from a commercial bank.
All right. So, what role will the Central Bank of Kenya Governor Patrick Njoroge play to ensure that, as much as the interest cap rate has been lifted, and we are going back to what we used to have, that banks do not take advantage of Kenyans? Because there were allegations, some time back, that banks are actually taking advantage of Kenyans and offering some interest rates that given Kenyans cannot afford.
Yeah. I think one of the major steps is we have that banking sector charter is already in place now, just to enforce that in terms of customer more transparency by banks to customers, and no charging of I'll say hidden charges, more disclosures, so that a customer can actually realize exactly how much interest they're supposed to pay. Things like enforcement of actually having your interest rates displayed on that total cost of credit website, so that customers can actually have more choice and they can vote with their feet. Basically, there are around 40 commercial banks in Kenya. If the current bank that you're in is not pricing you favorably, you're in the 20%, but you do know that you have a good credit record, good credit score, and you can go to another bank that will give you that same facility at 15%, then basically having that option is one of the key aspects, also to increase competition in the banking sector to offer loans.
All right, thank you so much, Caleb Mugendi, Assistant Head of the investments at Saito, talking to us about that cap rate that was lifted yesterday by members of parliament because they didn't, have the required quorum. Only 161 were in parliament inside, National Assembly instead of 233. Hence,